weekend all. Ira Epstein of Linn Associates with your financial market wrap-up with your weekend edition for this April 12th, 2019. Now remember, on the weekend edition, one of the things that I try to do for you is we start off with one monthly chart and go to weekly charts so that we're looking at a little bigger picture on what's going on. Another event that's happened this week was we started recording our morning videos much earlier. Hit snafus, which I'd expect, and we think we've worked them all out this week. Come Monday, you should see a big change, and the time of them early. So I start recording them sometimes quarter to 7 in the morning. Try to get them out before 7:30 in the morning, but sometimes 7:15 or so that you get a feel for what the market's done overnight, where we're at, and ideas on trade. Talking about trade, you realize you're about 1% away from an all-time high in the S&P, the NASDAQ about 2% away. We know the Dow is further away because of the Boeing incidents and some of the other things. We also know that we're getting closer on a trade deal with China. Mexico this week sat back and did some reform to the labor, allowing people more rights that Nancy Pelosi was saying she'd need before she could bring it up in the House for approval. We're looking at energy prices still relatively strong, so to speak. We didn't get much of a bounce out of the natural gas with that cyclone bomb, as they like to call it. So let's look at where we're at. And you can see on a monthly area chart of closes that the highest close we recently had was 29.19. You're 7 points away. Now, that's not the all-time high, but that's the all-time high close. Pretty impressive, isn't it? Would you have thought this break into December would come back that way? I can tell you, trader upon trader did not. And yet it's almost a straight line up on a monthly basis. When we take a look at a weekly chart, you've had very short periods where the market has backed off on a close. I think you can see that very clearly from December. One of the most vertical moves I've seen in the markets. And the question is, if you look at it, you almost have an inverted head and shoulder. Think of the head here, a shoulder, another shoulder, and it's breaking out to the upside on it. So you would grab this and flip it over, and that's where you're getting some people talking the 3,100 level in the S&P. When we just put on a weekly bar, here's that head again, shoulder, shoulder. So gives you an idea. But as we look at how the market just moved itself up, you would think, boy, all you have to do is be a buyer and it goes up. I wish it was that easy, but it's pretty much what's been going on. And you do have the higher lows and the higher highs. So unless the market takes out 2789.50, the pattern of higher highs, higher lows is certainly in place. The market, we had seen for a while there, if we come back here, how the 18-week average was dropping, and the question was, they were getting close together. Would they come together or not? Well, they did what you call a kiss. They came in and then turning away from each other again, which is still very bullish. Even if you took out this break low that I just showed you, you have layers of support from 27.13 roughly down to 26.70. In terms of resistance on the weekly chart, you haven't even hit a Bollinger Band yet. You did it back here in July of last year. Are we going to get a repeat this summer? I don't know, but the trend is up, and this market has still got the upper Bollinger Band running away from the market, not even close to it. From where you're at tonight, that's still 50 points higher. That's still a large move. In terms of momentum, locked in. The slow stochastic, when I look at this momentum oscillator, I don't look at it as getting overbought or oversold on a weekly chart. How I look at it is it pointing up, down, or sideways? I find that more reliable, at least the way that I teach charting on weekly charts, but I do not do that on the dailies. So I see momentum up, the bias is up because you're over the 18-week average, and certainly the trend with higher lows, higher highs is still in place. Now remember, the idea of Bollinger Bands, and that's these black dashed lines, whether they're on a daily chart, a weekly chart, the algorithm is built to keep the market trading within the bands 95% of the time. And yes, bands can be pushed out just the way they were here, but they typically get pushed in or out, or they'll fall back in after a market exhausts itself one way or the other. You haven't had that. This market just keeps pushing them out and away they're going. So still room to move to the upside here to the 77.55 area in the NASDAQ. The trend, you've got the higher lows, you can see that, and certainly the higher highs and momentum up. When we come to the Dow, as bad as you would think it is when you look at the dailies, if you go to the weekly chart, you're still up for the week 14 points. You've withstood this Boeing incident that happened through here, and the market's coming back. What's the trend on the weekly chart? Higher lows, higher highs, still room on the upside. You'd have to get under 25,377 to break that pattern. Momentum's still up. In the Russell, the pattern's not as bullish in this chart as in the others. I know that sounds crazy because you would have thought, at least logic would have told me the Dow would be weaker on a weekly chart, but it isn't. This chart's got the lower low, the higher high. Yes, momentum's up. It didn't even fall back to the 18-week average of closes. And if it decided to catch up with the other indices, it's got quite a ways to go there. It's almost 100 points away. In the VIX, it's the 100-week average that is the important number here. This market's been centering around it for a long time. Now, on the weekly chart, do you think the market can get down to 745, the Bollinger Band, and look at back last year? This is pretty much that range you were in. You're in right now trading within that range. That's the important thing. So what do people think of insurance? They're thinking they don't need it. The volatility is low, and they're not picking up on the VIX to protect themselves. Doesn't mean they're wrong. In the 10-year notes, the market got up and over the upper Bollinger Band right through here, and that was when interest rates fall. Remember, this is an inversion market. The higher you see this market go, the lower real rates are. Now, at some point here, the market gets carried away with itself. We had 2 weeks in a row up and over the Bollinger Band there. The odds of staying over a Bollinger Band, 5% of the time. And when you do it in succession, I subtract each one of those successive times from that 5%. So 2 of those 5 percentage points were gone. Last week the market pulled in, and again it's doing it. Support back 122.09 to 122.07. Momentum is pointing down. The market is without a trend. It's got a lower low, and then it had that zip higher. So I don't see this market yet trending, but I do see the market respecting the upper Bollinger Band. In TLT, a bit different of a chart look. You've got the higher lows, the higher highs, and where did it run into resistance? If you knew nothing else, remember about the Bollinger Band. 95% of the time it'll trade within it. I teach, it doesn't mean I'm right, but I teach that the first time you hit that band, especially if you've got a broad part to it, it often runs into a key resistance point. The market went up on the week of March 22nd, hit that number, extended a bit further even on the 29th, but all of a sudden, look what's going on. So again, I think the pros use those ideas as to when to back away from a market. Now, they're going to be looking at this combination, 121.68, and thinking, I think at least, excuse me, support in that general area. You have divergence. You've got the trend up. You've hit an upside target and momentum pointing down. In the dollar index, we have lower highs and a lower low, but it's negated because you closed over the 18-week average of closes. I have allergies, so I'm sorry about that. Now, if you close under 96.33, I'm going to look for the market then to join in on the downtrend. That's a real important number. Take out 97.09.5, last week's high, not this week, last week's high, and you put back in higher lows, higher highs into the upper Bollinger Band, that record area. It's going to be a real important week this week in that market. In the eurocurrency, it's a flip-flop of it. You've got the higher lows, higher highs, but you closed under that number, the 18-week average. Close over it, I think the bulls grab control. Their momentum often leads price, and momentum is trying to turn up right here. Take out 122.55, and you break this pattern. And then the lower Bollinger Band in the 112.19 area comes into play. I wouldn't know what to do in the British pound because every day is a new drama in the market. And at the end of the day, as much as you might think chart action is chart action to a degree, but you don't know what you're going to wake up to. It's like going through a major report every day. Right now, I see a pattern of lower highs, higher lows. That is not a trend. I see momentum down, but bias up because you're over the 18-week average. I'll leave it be. Canadian dollar, another neutral market, right now at least. Higher lows, lower highs, stuck at the 18-week average of closes. So on the daily chart, you've been whipping, but you're not moving around very much right here. Obviously, the market needs us to get that new, I won't call it NAFTA, it's the U.S. MCA deal. In the Japanese yen, the market has given up this rally, fallen back down, didn't even pay much attention if you look at the 18-week and the 100-week average. You did it right here. You came down, you found your support. Then the week after, the market comes down and just sliced through it, and it's been slicing through it. It went back up for the resistance this week and challenged those numbers, but you're not trending. You've got the lower low, higher high. Bitcoin, you've broken out of this sideways action, so even if it corrects a bit here, it still looks like a bottom is in place in that market. In the Brent versus WTI crude, I don't see a real change of much of anything. The Brent keeps narrowing into U.S. crude. You can see how the Brent is still in an uptrend, momentum up, higher lows, higher highs, support back at 65.30, resistance 73.75. At what point will this market be high enough? I saw today that the U.S. put on more sanctions against shipping lines that have been moving Venezuelan oil to Cuba. So that happened late today from the State Department again, and that just keeps the pressure on as you're taking some more oil off the market. And I think it was Venezuela said that they lost in this past month about 500,000 barrels a day of production. WTI, look at how this market moves up. You saw Chevron made a major acquisition. It's a shale oil play. They're looking down the road. They weren't an early player in it. Now they're coming in. Is that a high number? Well, it is, but you still got momentum up and trend up at that point. Rebob gasoline hasn't given up since December. That was the time when nobody wanted it before this spring season came. Away you went. And this is paying attention to the seasonals. And nat gas can't even get a bounce out of bad winter storms. Still looking pretty sick on the chart. Still in a bear play. You know, I start you off, as I said, each morning I wake up, and the first thing I try to do for my subscribers to my research is give them what I'm seeing in the markets. I used to put it out closer to 8:30 in the morning, 9 o'clock could be published. Now I'm trying to get it published before 7:30 in the morning for you, and that's Central Daylight Time. And I'm reviewing not 40 charts anymore. We're going to change that to 45 because I'm covering about 4 or 5 ETFs, the big ETFs for you, and I'll be adding more things. I'm even thinking of doing a Sunday video so that for the start of the week, which opens 5 p.m. Sunday night, they get a better feel for what's going on, and then I'll do it again Monday morning. But I'll talk chart action, what I think the pros are doing, technicals and fundamentals, and here's what I can do in that video unlike this one. Buy here, sell there, do this, do that. You're in this market until this and this happens. I can throw my specific trade ideas instead of talking the generalities that I have to do here according to the rules of being a registered broker, and that's what I try to do. But here's where I really can throw the meat out. Now, it is a subscription, there's no question. It's 26 cents a day to give it a try. I didn't say that wrong. 26 cents a day for the first 30 days. After that, and by the way, no contract. You can decide you want to stay with it. If you do, you can go to $15 for every 30 days. You can buy a 1-year subscription for $156. Call it a day. And believe me, I'll pour my heart out for you in that. The idea here, give you, if you have your own trading ideas, another thought on what the charts look like, and maybe that helps you with your trade. I'm Ira Epstein. You have a great weekend. I'm going to hack my way out of this. It's terrible pollen right now in Chicago. You have a good one.